Yes, 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 yes. Turn this down. Man, what is going on? Woo! What is going on, man? I missed you guys. What is going on, man? So, I feel like I've been in a hole the last few days. I got no I got no house to work on. So if I don't have properties to work on, I usually like to try to write, work on books or whatever creative shit that I'm doing. Um, Rodney says in the middle of You Don't Have to Die Broke. Cool. Like that book I wrote when I didn't have a property to work on. Um, when you start working on properties, it gets hard to do it all. So, oh, we got 29 viewers. We'll give some people a minute to come in. I didn't turn Instagram on. I'm a little aggravated with Instagram, man. It started to piss me off. But let's don't let that ruin the music, man. I'm hoping I'm going to email out the new book today or tomorrow. Take your time with that, man. It's not a book that you sit down and read like Gone with the Wind. It's ideas. It's like you read the phrase and then kind of chew on it, man. Read it, think on it, listen to a little 2 minute audio, and then don't advance ahead. Like think on the shit for a minute, a day, 2 days. Take your time with it. Um, so today I'm looking at, I'm going through my top 20 holdings. And you want to do this all the time. You want to run through your portfolio and see what you're looking at here. Now this is Twitter. That's a trade, but my very top holding that I have the most money in is BX. Now, if we back up BX and let's go to a weekly chart of BX. At one point, we were at $145 in this run up, and it's pulled back to $90. Well, that's a $55 a share drop, all right? And I'm trying to think, what do I own? I got 173 shares here. Let me see. 145 shares there. So what is that? 173, 145. Come on, Joe. What is wrong with you? 322 shares. Well, $55 times 322. That's a pretty damn big pullback, man, on that stock. And the truth is, that's just normal movement, man. Nothing unusual about this. If you look at this, where this thing has come from, I mean, it was way down here. So, Blackstone has had an amazing run. They profited from all the, inflation, money printing and all of that. And this stock will go up and down, up and down, up and down. And eventually it'll work its way higher, hopefully 2, 3, 4, 500. So I've owned this stock since a long time, man. It's been 8, 9 years. So if we back it up and we go to a monthly, I've owned it since back here in the $20 range. And at one point it went to 150. So my point to that is you're going to own stocks, and let's say you're up 200-300%. That's not a reason to sell a stock just because you're up. So as an investor, you really got to put the investor hat on and take the trader hat off. And in the investor hat, it's time times amount times yield. So over time, the stock's just going to keep dripping you money, and they'll go through good times and bad times. And our goal isn't to avoid the bad times. Our goal is, how do we prosper in the bad times? What can we do? How do we get on the other side of the cash register? And but along the way too, we got to realize we're going to mess up. We're going to have things wrong. So if you're in the Money Flow gang, I'm sending out a video today. I'm going to try to do more of these. Maybe that'll help people stay engaged. Maybe that'll help them stay motivated on 3 ways to find stocks. How I go about finding stocks. That seems to be a problem for people. But once I've found them, so this stock now, my concern is, okay, so this is a stage 1. I want to come over here to Morningstar, and I want to kind of see, what do they think it's worth? And I talk about subscriptions in this video I'm going to send you. It's just a short video of me at the whiteboard. 3 ways that I find stocks. And if we come over here, we can click stock analysis. Anybody can do this. A little subscription to Morningstar. And they say it's trading at a 30% discount. Now, will they revise this? When you get into a downtrend, fully anticipate they're going to start lowering and lowering and lowering what a company's worth. It's just facts. I mean, it's just the reality. If you make less money at work and your bills go up, your net worth will tend to start to go down. Like same in a business. Like if the business environment isn't good. So for me, like as I weigh BX, it's right now, where is it at? My position is like $36,000, okay? The next highest position is $17,000. So for me, I'm probably not adding to this. I mean, maybe a little. But let's say it's you. Well, you're new. So the point is these, at one time McDonald's was $50 and then it was $100 and then it was $150 and then it was $200. Stage ones. So you have to keep in mind as the stock goes through these stages, what you want to do and what somebody else might want to do might be different. You can see the money flow pattern playing here, man. Is it pretty? Is it tradable? So we see the money flow pattern playing out. So as an investor, as I watch this pattern here of price moving through stage 1, stage 2, stage 3, stage 4, stage 1, total normal movement, right? I expect pullbacks, I expect crashes, I expect recessions. That is how the investor gets a leg up, is as you now go through your portfolio, you're going to go, okay, I own that. And you'll see the power of dividends in today's market where, all right, if I own all these stocks that pay me money and I set it to buy me more shares, then I've created this magic money machine that's buying me more shares. You're not near as worried. When you watch Bitcoin investors, and I'm one, tech investors, I'm one, they a lot of weak hands, man, because there's no money given to you. All you have is an account balance down. And they didn't think through, like, how do I make money on this if it goes down? Well, you got to buy more or wait. And that freaks them out because now they're buying more of something going down. Once you own dividends and you see that, you totally approach it from a different perspective. You're like, oh, good. Shit, take it down. Like you have a different view. That's why I say a lot, it's much easier for me to take an investor and make them a trader than a trader and make them an investor. Much easier because the mindset, the foundation's already been laid that to get good deals in real estate, we need lower prices. And that doesn't mean we unload our portfolio into the lower prices. It means we're prepared to pick up more properties into the lower prices. So as I look through my portfolio, I'm like, okay, what's a stage 1? What's undervalued that I don't have a massive position in? So I go down my top 20 and I get into Southern Electric. Where's Southern Electric right now? So let's pull up Southern. I own a bunch of Southern, like $20,000, $18,000. Stage 2 breakout. If I'm a trader and investor, now you guys know this, if you're looking at this, what is happening right now? Stage 2 breakout is underway in utility stocks, right? That's stage 2 breakout. As an investor, do I want to buy stage 2 breakouts? Maybe. This is your last chance because I'm damn sure not buying it up here, right? This is my last chance as an investor if I want to, if the goal is to accumulate cheaper. If I'm a trader, none of that matters. It's been here before. It can be there again. It's breaking out. That's my target. So we might approach the same stock different. I don't want to buy this in my buy and hold. Down here I did. That's not a bad price right there, right? Down here I did. That's not a bad price right there. Maybe down here I did. I don't want to buy it once it's breaking out and running. So as an investor, I might be looking up here to unload some of these to pick up maybe something like Hanesbrands. So as I begin to look through my portfolio, and I like to print it out like on a physical page, If you follow my Instagram on my subscription feed, I print these off. I show them, exactly stocks, how much I have and what. And what I'm trying to do is show them this connection between. For me, I print them all off. I print off all the pictures of my houses. I put them into this plastic folder. And as I buy stocks throughout the week, I'm like, all right, so this week I'm picking up some Delta, some GOV. I got 200. And I may literally buy one share of Delta. One. That's all I got. And 10 shares of GOV. But I want to be in a constant state of managing and doing what I'm doing, man. So stage 2 breakout underway for utility stocks. Let's see. How much do I own in Duke? So I will go through it. I want to see what utility stocks do I have here. Duke, I only got $8,000. So think on that. I got $17,000 of Southern. I got $8,000 of Duke. So let's come over here and let's just see what Morningstar thinks about Southern. They say it's trading at a 9% premium. Damn. Now let's check Duke. Fairly valued. We got a conundrum. So Southern Electric is my second largest position. It's trading at a 9% premium. It's trading like a goddamn growth stock. Do I want to add to that on this breakout here? Do I want to add to something trading at a premium? As an investor? No. As a trader, yeah, set it up, trade it. So as an investor, no, I'm not adding to this. You could shave it and add to Duke, but I don't want to shave it. I love my Southern Electric. That's how I got to 17,000. Is I love it. It's a beautiful stock. That's why it's trading at a premium, because it's a valuable company. They always make that dividend. So, yeah, and you could. Rodney made a good point there. You could shave it. You could shave a little, and then that does a little bit of a balancing effect in your portfolio, and it redistributes, and you're adding to an undervalued asset. So that's actually a good response. I personally am not, because I really, really like my Southern Electric stock. I would rather put new money into Duke than to do that. But not to say I haven't shaved Southern over the years. I have. Now, if Southern gets up in this $76 range, pushing all-time lifetime highs, like if we get up here, this is the highest it's ever been, man. And it's trading at 20% overvalued. You don't have to be the greatest genius investor in the world to think, okay, I own an asset that's trading at a massive premium. Yes, it pays me a little drip, but it's at all-time highs. Maybe that's when you think about trimming a little, like Rodney's talking about. Just something to keep in mind. So this is what I'm going through in my mind, and I'm laying all of this over the money flow, this price pattern. And I'm also laying it over, I don't know the future. I really don't know where stocks are going. I do believe that 70% of the time stocks go up. So that's my trump card, is that over time I'll be right. Time times amount times yield, right? And so as I look at this now as an investor, I'm seeing a trade setup, right? That's what we were getting at. So I think it's easier to turn an investor into a trader than a trader into an investor, because a trader never sees an investment. A trader always sees a flip. Flip, 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 flip. An investor doesn't look like that. Investor's looking to keep it. So anything less than 7 to 10 years, you're flipping. You're not trading. You're not investing. And for me, it's usually like lifetime. Like, I don't even want to buy it if I don't think I'm going to own it for the rest of my life. Why bother? Otherwise, we're just trading, which is fine. But don't put it in the buy and hold if you don't think you want to own it for the rest of your life. So as you begin to approach it like that, then you're very, very limited what you put into your buy and hold. It's like, I don't want to put Twitter in there. This fucking thing may not even be in business. Southern Electric will be in business. So I don't want a bunch of things in there that I don't think will be around, or that I might change my mind because the price goes down. Matter of fact, any of these stocks in my buy and hold, if the price goes down, I want to be a buyer if I can, if I got the money. So as I go down the list, Pepsi is my third largest position, 16,000. Pepsi, now watch. Watch how this makes you a good trader. If you're a trader, if you're an investor first. Stage 1, stage 2, stage 3, stage 4, stage 1, Stage 2, where's the target? Up here. So the best way to be a good trader, in my opinion, is learn to be a good investor. Because the skills you're going to get as an investor build the base that allow you mentally to approach trading, and you're going to have an edge in that. Look at this chart on Pepsi, guys. Look how perfect it follows the money flow. So if we're looking at this, I mean, I wrote that like years ago, years and years and years and years ago. I wrote this, and I got that from Stan Weinstein, who wrote about it in the 80s. He did it on a weekly chart. All I did was brought it to the daily chart, and I began to see, no. This plays out on the daily. And then I realized, fuck, it's fractal. It plays out on the 1 minute, 5 minute, 1 hour, 4 hour. And so I needed to, whenever I share that with people, blows their mind. And then they usually use that to damage themselves instead of to help themselves. So the only time I would want to buy Pepsi as an investor is down here, right? And then up here, I either want to sell it, trim it, or do nothing, right? Now, if I know that, because I have that basis based on this, and I know price is just a social agreement. I talk about that in the new ebook. It's just whatever the fuck we decide. There's no rules, hard and fast rules. To high could be who knows how high, and low could be who knows. Like it's total social agreement. But what stocks are doing is they're swinging back and forth from undervalued, overvalued, true value based on current market conditions. So what do they think Pepsi's worth? I just gave you a master class in investing right there. Let's see. Come on, man. Click the goddamn button. My computer's running slow. What are you babbling about, Brett? I see that you have stocks like, I don't have SPHD, but I have stocks like that. Yes, sir. Do you have high option? Do you have a high opinion on ETFs that push out a dividend? No. ETFs are fine. If you're a little girl and you're scared to buy the stock, buy the ETF. So buy the ETF, man. If you don't want to look at stocks and pick stocks, then ETFs work just fine. Started doing a class on that yesterday. And if you're going to do ETFs, then really learn them, okay? Learn all the 11 main sectors of the S&P 500. Learn the subsectors. Learn all the different ones because you're going to need to know that in place of stocks. You need to know whole sectors and not just stocks within inside a sector. So like Pepsi is part of the XLP, right? So so we want to know that. We want to know. What I was saying is use the ETFs to find stocks, but we're getting off track. If you don't like stocks, if you don't like researching stocks, then doing ETFs is a very safe way to play the same game. You'll always earn less dividend yield. You're always paying someone for that. Anytime you're getting less risk, you're paying more money. The further you get from the money, the less money you make. Meaning if I hire a property manager, yes, someone else is managing my property. Now my time is free, but I pay a cost for that. Right? I got to balance that. If you own an ETF, you're paying a fee to own an ETF. If I just own Pepsi, then I just own Pepsi. There's no fee. So like I own 77 stocks. You're like, wow, that's a lot. Yeah, diversification. I want to spread my money out. I don't want any one company to destroy me. So if Bitcoin goes to zero, that'll suck, but it's not going to wipe me out. If one stock, well, that's diversification. That's what ETFs offer you is diversification. Well, why don't I just do it myself and I ain't got to pay a fee? And if you have small money, you're going to think, well, the fee's not that big a deal. Well, fuck, man. I got like $3 million. The fee's a big deal. It's so if I did managers on all my properties, managers on my money, I'd be paying like $60,000 to $70,000 a year for these people to manage my money. Why don't I just pay myself that and sit around and read and learn? So I don't, that's how I approach it. But everybody's different. So it may be worth it to some people to do that. It's not to me. For me, the whole purpose of investing was freedom. So if I don't pay someone $60,000 a year, I'm free. Meaning I can do it myself. I ain't got to do anything else, right? So that's how I see it, man. So you see how Pepsi, there was our stage 2, there was our 1. If we were trading this 174 target, so we can now add options if you want to get into trading. But being an investor will help you because if you own Pepsi, you're always following Pepsi. You always get to see the breakout in Pepsi. What's number? Chevron's my 4th largest position. Actually, Exxon. Do I want to buy Exxon here? What do they think Exxon's worth? That can't be right. I must have typed in the wrong thing. Let's see. They're going to say fairly valued. Watch. Yep, fairly valued. Fairly valued. So Exxon's my third largest position. Do I want to buy a fairly valued stock? Not me. You want to buy a fairly valued rental property? Not me. It's just not how I see it. It's not how my brain sees it. Now, if I'm a trader, I can. I'm not worried about fundamental value. I'm worried about the chart setup. So as a trader coming at this, I may say, yeah, man, I may set this up as a trade. I got solid support here, right? So we got stage 1, 2, 3, 4. Now we're kind of building out a sideways stage. So as a trader, I'm looking at this as being a stage 1. My target is stage 3. As an investor, that's no interest to me. That's way too much work for a little bit of money. This is not a deal. You see what I'm saying? So as I approach this, that's how I would look at it. So I'm just going to hold my shares of Exxon. Now, if Exxon comes down to 1 down here, 74, different conversation, right? So this takes no time at all. Exxon is a no play, nothing to do there. You know, if you're a trader, maybe that's setting up for a trade. MO. MO is one of my top 10. Let's pull up MO. Oh, ho, ho, ho. Now we got some. All right, that's what I like to see. You're like, what do you mean? Big dividend payer, always pays its dividends, setting up on a stage 1. And the first thing I do is like, is the RSI extreme? Yes. Was it extreme on the last point? Yes. When I get this to this, it usually tells me it's an exhausted move. It's done. So I'm using my trading skills over my investing skills. So we've had a move from here to here. Get it? One extreme to the next. That tends to stop the movement and then change the stage. And then it goes into a stage 2. How long does it go up? I don't know. May not go up much, but it tends to stop it when it goes from one extreme to another. Stop it, turn, start to go. So we know that that's a possibility. We know stage 1. Has it ever stopped here before? Yeah, it's been here before, right? We got that little zone right there. All right. So we're building out the money flow pattern, right, of sideways up, sideways down, and now we're building sideways. So what is MO worth fundamentally? Let's come over here and let's see what they think. And you might run it through multiple sources, and you might just love reading about balance sheets. I'd rather go to the dentist. I'm not into that stuff, man. Not that I don't know how, and not that I haven't read books on it. It's just fucking boring. I expect the CEO to do what they're hired to do, and I expect management to do the right thing, and I assume Morningstar's doing the right thing. So they say it's worth $52. What I need to know is why the hell is it $41? Well, we know the answer. Look what just happened. Final nail in the coffin. Altria's jewel investment. They put $30 billion into that shit, and now it's going to zero. So they lost a lot of money. Makes total sense that it's fallen from 42 to 41. Now, they've been preparing for this for a minute. This is not a big surprise. I don't know why this shook everyone, but it did. So as an investor, what am I doing? I'm waiting for that stage to set up, start nibbling, dribbling. Now, what I don't like yet, and if you notice, if you're in the Money Flow gang, I have not text that I'm adding to this. Why? It has not stopped dropping, guys. This is pointing straight fucking down. Look at that. Look at the moving averages. They're straight down. So, is this level holding? Appears to be. Could you jump? Yeah, you could. It ain't no big deal. I'm just pretty particular because I teach the money flow. I like to be as consistent as I can. I don't want to be as loose as everybody else, but you could jump it. No big deal. You're buying in the right place. Stage 1, MACD's turning up. Whenever I see this turn up though, and the moving average is still pointing straight down, tells me we might have another leg down. But that's advanced stuff, man. We don't need to get into all that. So MO, definitely on my buy list. It's undervalued by 20%. It's got a 6.5% dividend yield. It's in my top 10. That makes me question it. I've got 20. I think I have a lot, dude. Let me see. 12 plus 13. I've got $23,000 of this stock. Man, that's nice though. That's a beautiful chart. McDonald's. Where's McDonald's right now? Now, do you see how being a good investor just set you up for a possible swing trade? This is a bread and butter too. This is my next book coming out, right? Run to the 200. 200 is below the price target. So the company's worth 52. The 200 days 47. And here you are at 41. 20% undervalued. Big dividend. The news is being digested. This is setting up for an easy trade, man. Easy swing trade. So again, being an investor will make you a good trader, in my opinion, over time. Which one were you looking? Oh, McDonald's. Where's McDonald's? Man, I'm excited for you guys. McDonald's ain't doing shit. McDonald's is stuck on the 200-day here. What do they think McDonald's? What do you bet McDonald's is fairly valued? Watch. I haven't looked in a minute. This is what I do. Like I sit here and go through. I spend hours sometimes doing, not in one day, but dude, I swear I have not looked at McDonald's on Morningstar in a long time. What does it say? McDonald's is trading within a range we considered fairly valued. How did I know that? By just simply looking at the chart. You're like, what do you mean? I've looked at so many damn charts. This is what a chart looks like when it's fairly valued. You just look at it and it's sitting. These points start to appear. It's just sitting on the 200. And this just takes time. That's a fair, I mean, I can look at them and tell you what it's worth just by looking at the chart. Because it's a big institutional company, there's not a lot of playroom in these. I mean, it's not like it's Bitcoin or a penny stock where there's huge swings. These type of stocks are rare. So when you get this and you're an investor, you buy that shit. Look, RSI came up. So the money flow is going to have you on the right side all the time if you have faith. If you don't have faith, this does not work. So if you're listening to your brother-in-law and he's like, oh, blah, 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 he does not know what he's talking about. No, neither does anybody. So that freed me. The reason I always overemphasize that is it's part of my faith, meaning I don't put a lot in what one man says. He really doesn't know. He's guessing. If he knew, he'd have all the money in the world. Same for me, meaning I'm saying that because I don't know. So I want to be okay with that. If you think you need to know direction, you're always going to be messed up in the head. So all I want to know on McDonald's is I'm going to accumulate more over my life, and I want to buy stage ones. That's all I need to know. So as I watch the chart every day, what are the stage ones that I really want to buy? These ones where it goes extreme. What about this one? Nah, man, that ain't extreme. I mean, when you get these good big ones like this, that's the shit you want to get excited about. So those are the ones that are going to make you money over time. Because if you're just watching this McDonald's chart, and just over time, you're accumulating ones, even though some of these I wouldn't have bought, and that's another conversation. But just as a general rule, I'm just quickly grabbing the ones. I mean, isn't that better than buying up here? I mean, just as a general rule. So would I buy McDonald's here? No, fairly valued. Did somebody ask about that? Yeah. So I wouldn't buy any McDonald's here. It's fairly valued. Unless you just wanted a little piece. Like maybe you buy like a couple shares and you're like, okay, when it comes down, I'm going to add. There's nothing wrong with that stuff. What about Verizon? One of my top plays. I bet you, maybe I'm wrong. Let's see. Look, you see how it's hugging this 200? Look at this. I got a feeling they say it's fairly valued. Let's see. What do they think Verizon's worth? And I haven't looked at this one in a minute either. Oh, no. 1, 2, 3. They got 4 stars on it. 14% discount. All right. I'm surprised. Now, if this doesn't convince you of the money flow and that I'm not a charlatan. Sometimes I get people say that, and I'm like, dude, look at the charts. When would you have want to buy? When would you get excited about it? Now, if you have a portfolio of, say, 40, 50 stocks, the setup you're looking for is this right here. Sideways, up, sideways, big down, and then what? Sideways. This has been my repeat on over and over. There's your buy zone. So you're buying at $48, undervalued, right? That's when I want to buy it. Every time it does that. And when it goes above that, I ignore it. And as I go forward in life, years and years and years of always buying when they're on sale, you begin to multiply. And as you begin to multiply, you'll see all of a sudden I'm up 60, 70% in stock. We have a 30% pullback. I'm still in the green, right? And then all of a sudden you do this for years and years and years. You're just in the green all the time. Because as time moves forward, the stocks go higher, pull back, go higher, pull back. It's pretty cool. So let's see. So that was our last good buy chance. This is not a buy for me. That's just not worth it. Not for me. I'd rather buy MO than that. You're like, what do you mean? I mean, I like that extreme. So look at that extreme pull down. I like that. Hanesbrands, another large position of mine. We got in extreme. Yeah, I'd be a buyer here. What is Hanesbrands worth? I mean, you could make a case that people, if we go into recession, people are not buying Gucci. They're buying Hanesbrands. Let's see. 5 stars. 60% undervalued. 7% dividend yield. Come on, man. Come on, man. That is such a beautiful play. That is such a beautiful play. 7% dividend yield, trading 60% below value. I mean, that's got to be high on my list every day. Where are we at? Pfizer. So what I'm running through is my tops. Now, I own Pfizer as an investment. I think that gives me an edge to trade Pfizer. Why? Because of the setup I'm looking for. Right? I mean, look at these money flow patterns on Pfizer, dude. Sideways up, sideways down, sideways up, sideways down, sideways up, sideways down, sideways up. What is Pfizer worth? I've got $10,000 at Pfizer. It's fairly valued. Pfizer's trading in a range we consider fairly valued. Why would I put more money in that? I've got $10,000 worth. I'll just collect my little dividend, and that stock is off the radar. Like, I'm not really looking to add or to, you get what I'm saying? So I like to go through, and so I'm constantly, usually I'm doing a few a day, or as I'm teaching it, I'm doing them. You know, you're going to have a hard time doing all of them. Look at Well Tower. This is one a lot of people don't talk about. Assisted living homes. Watch this. I want to show you something. Undervalued, right? 14% dividend or below value, has like a 4.5% dividend yield. During COVID, watch what happened to Well Tower. Because all the old people were trapped in these homes and dying. Now, this is when I lose people. People are like, fuck this guy. I'm not doing this money flow thing. It fell from $83, where I had a lot of shares, to $20. Why? Old people are dying. They're having a hard time doing business. Like, it's COVID. I had a friend that owns assisted living homes, and I call him, and he's terrified. Like, he's concerned that he's going to go out of business. So this is one of my stocks. What do? Well, I got a choice. I can stay the course that we already decided we were doing, that we believe that over time stocks go up, and I can just have faith, and I could start buying, because that's what we do, is we buy stage ones, and I just believe. And I suspend all the bullshit I see on CNBC, Jim Cramer, and all these other people on YouTube, and I ignore everyone, and I just fucking follow this. That's a choice for me. And this is why I teach this, because this has always worked for me. Over time, this wins. This is what happens. So as I watch this, all I had to do was have faith. Imagine if I'd had a lot of faith. I could have got rich. And I could show you this 100 fucking times on 100 charts. But you've got to be able to withstand that, man. This is why I say it takes courage, man. Most people don't have it. They're not really investors. I mean, I'm just being honest. Like, they're not investors. They're not. They're just trading price, man. They think the investment is related to the price. Price is a social agreement. And the social agreement changed. It was 83. 3 months later, it's 21. Social agreement changed based on the current. Oh, wait. No, it didn't. Now it's 21. Now it's back up here. Now it's at 100. And guess what? It could come to 44 and then back to 69. So you get what I'm saying. Fuck Peter Schiff, man. That guy, dude. You ever mention that in my Discord, I'll kick you out. I hate that guy. Fuck Peter Schiff. So that guy there has done nothing but cause people to lose money. That I hate him, dude. Like, I seriously dislike him. And I'm being serious there. And you guys post shit about Peter Schiff, I'll just block you out of the group. And he's like, because I know, man. I've lived through life, man. I've been doing this for almost 20 years now. This wins. And I've listened to those guys speak their fear and doom and buy gold and all the dumb shit for 15 years. And it's left everyone in poverty. Markets go up. I don't care what Peter Schiff says. Give two shits what he says. Markets go up. And if you need to know that, let's pull up the damn SPY. Let's take it back to 1850. It goes up, man. Up. Always going up. Periodically coming down, man. Periodically coming down. So you don't need to listen to them. Of course it's going to come down. Of course we're going to have recessions. Of course we're going to have pullbacks. Of course we're going to have crashes. That's called the business cycle. Talk about it in the book. What you don't want to do is sit around listening to the guys constantly preaching, because they make money selling fear, man, not opportunity. So all your buddies that bought gold, piled it up, they're just going to have a big pile of shiny shit that they got to pay someone to watch. It doesn't produce cash flow. It doesn't, not going to, what are you going to do? Sell it? Now you don't own it. So you have gold. Now you sell it. Now you don't own it. Now what? So, yeah, never opportunity. That's why I just can't listen to them, man. I hate them. I hate anybody who talks fear. It's such a waste of time. All you need to learn stage ones, pick up stage ones. So the SPY's coming back today. We love, at least I try to get everyone in the Money Flow gang to love red openings. I want the Dow to open down 1,000. I want it to open down 500, because when it comes back, that's a show of strength. I want to buy into that. If it's just dropping, the worst thing is the market opens up and then it turns around and goes down. That's horrible. That's not what you want. And we see it coming back right now. We'll probably be green into the close. We'll see. Oh, where's the cues? Man, Peter Schiff pisses me off. It's not even about his stand on Bitcoin. I don't care if people like Bitcoin or not. But just constantly scaring people is terrible. Yeah, fuck Robert Kiyosaki. He wrote that book, Rich Dad, Poor Dad, and that was a great book. Changed my life. Wonderful book. And ever since, he's disappointed me. Constant fear. It's constant, man. I don't know if you know this or not, but they make their living being influencers and selling books. That's what they do. And you're not going to sell a book going, hey guys, everything is great. Just hang in there. Have faith and everything will go well. Nobody watches that guy. Okay? The only guy they watch, just like news, if I come on here and post a video why I'm selling all my stocks, I'll get the largest views I get. If I come on here and post a video why it's a good time to buy stocks and stay positive, nobody clicks it. Nobody cares, man. It's unfortunate, man. That's why I try not to do any content that my subscribers want, because they don't know what the fuck they want. If they knew what they wanted, then they wouldn't be watching me. You know what I mean? Like, never cater to your audience. They don't know what they want. Nobody knows. You guys don't know. So I fuck around and start doing content for my subscribers. That's a good way to go out of business. Steve Jobs used to talk about, you can't give people what they want. They don't know what they want. They can't envision an iPhone. So you need dreamers. That's why I talk about in the new ebook. There's a whole section on this. And I watch people trying to be influencers, and they're like, well, man, my audience clicks on this, so I'm going to do more of that. And I'm like, okay, little puppet, you're going to be told what to do? What are you, a dancing bear? You're going to dance for them? Fuck that, man. You tell them what they're going to see. Dreamers, man. Like, getting in the car of a stranger for Uber, that was a crazy idea. If you ask people, hey, do you want to get in the car of a stranger? They're all going to say no. And then this guy's going, yeah, they want that. They just don't know it. You want a stranger to bring you some food from a restaurant? You'd have asked anybody that idea. They'd be like, hell no, man. They might put something in it. Guy creates that. Oh, no. They don't know it, but they want this. So be careful listening to your customer. That's sometimes horrible advice, by the way. That just blew most business owners' minds. They were like, whoa, I thought the customer's always right. No, customer's never right. Now we're looking at penny stocks, huh? I like the cues here. This is a stage 1 buy. Look at this. Yeah, man, this is coming back too. Nice. Nice. I tell you though, Rich Dad Poor Dad is a great book, and so is Cash Flow Quadrant. That is a great book, man. I wish I'd have wrote that book. Cash Flow Quadrant. Amazing book. Amazing to get your mind around the concept of being an entrepreneur and all that, this and that. But his stuff on real estate and all that is just nonsense. I'll be live tonight with the Campfire Real Estate guys. The 3 guys that I'm talking with, bona fide ballers, legit, own apartment buildings. Dan at one time owned 200 condos in Florida. I mean, these guys are the real deal. If you want to know real estate, I'm the baby of the group, man. And I own $3 million in real estate. I'm the baby. Like, I'm the little player. So to let you know, they're legit, man. That's it, man. That's all I got today. Oh, so as I go down my list, this is what I'm doing. I'm just trying to give you an example of how I'm looking at my portfolio. Delta. I wanted to cover this. I remember I bought some yesterday. But remember what I was saying. Investors make the best traders. That's stage 1. The most bullish thing in the money flow is coming back into the box. What do we see now? Delta's coming back into the box. So if I want to swing trade some, I want to get a little excitement going. Maybe I buy some call options. Maybe I don't know, whatever gets you going. But this is setting up for a swing trade with the target right up in here. What is Delta worth? What is Delta worth? Oh, baby. Look at this. 46% discount. Come on, man. Come on, man. Stage 1 on the money flow. Stage 1. Coming back into the box, which is the most bullish thing we can have in the money flow. Meaning it was doing a stage 1, it broke the stage 1, and then it came back into the stage 1. The most bullish occurrence you can have. That's usually when you get the rip. Especially on Delta. Keep an eye on it, man. Because when it does it on Delta, man, keep an eye on that. That's setting up for a nice trade, man. All right, man. I appreciate you guys. I really do. Hope this video helped. Sorry, I flipped out on Robert Kiyosaki and Peter Schiff. I just really dislike Peter Schiff. Really dislike. I mean, I don't know how you'd spend. I don't know how anybody'd spend 10 seconds watching that guy. What a waste of your life. I mean, I'd honestly rather go to the dentist and just have them drill. Just say, hey, randomly pick a tooth and drill on it. You'd get more out of that than you would watching that dude, man. I mean, I really would rather sit down and have a dental work done. That's how much I dislike him. Matter of fact, I think I did kick someone out of the group for posting Peter Schiff because I told him 3 times about it. I so dislike him that even seeing articles about him puts me into an tirade. That's how much I dislike him. Yeah, man, I appreciate you guys. The new book will be emailed to you either today or tomorrow. I got to flip through some final things. If you don't have it, just hit my bio link or geraldpeters.info. Get a copy of it. Especially if you're an entrepreneur, which everyone is, even if you have a job. You just don't know it. All right, man. You guys be good. Appreciate you.